Ladies and gentlemen, welcome to the Fintech Friday show with a sprinkle of just big tech and other names sometimes. Maybe we talk about HIMS, maybe we talk about Meta. You know, we like to keep it diverse, but the name is Fintech Friday for now. Maybe we change it again.
It's not White Boy Weekly?
No, that's what Chris Patel calls it, but in case we want to have him or Amit or some other investors on, let's not keep it to White Boy Weekly.
Off to a good start.
Okay. That said, Stephen Fiorillo, one of the great co-hosts of our generation. How you doing?
Fellow white boy.
You guys got to stop with that. Everything's
How you
going
doing,
all
though?
right. How about you guys?
Oh, I'm good. Tevis,
I'm
great
doing
and powerful. Haven't seen you in a bit.
I'm doing good.
Nice. I assume you've been buying BM&R and Nebius like usual.
Sure have.
Nice. It's a good strategy. I mean, hey, it's buy what you know, high conviction. When it returns, you return big.
Yes.
Steve, you specifically waited till this stream until from yesterday to talk about SOFI. You said you had something that you wanted to say about SOFI stock.
No, I said I had something I wanted to say about Hood stock.
No. Okay. What do you want to say about Hood stock?
That I was 100% incorrect.
Oh. Okay. And you're buying it? You bought it.
I did not buy it, but I was 100% incorrect. And, I will admit when I was wrong, and I was wrong. It took two teenagers to convince me that the younger generation is only going to use these platforms. And it has been made apparently clear to me. And the fact that somebody I was at dinner with moved a good chunk of capital to Hood, numbers that I couldn't believe. And this is no longer a platform that I can call a ridiculous joke. And it really does look like over the next 10 years, they're going to become a de facto brokerage. And I can't believe I'm going to say this. I can see a world where they have more assets under management than some, not all, but some of the big financial centers.
Sorry, I got a message from Roy saying that he can't make it. Everything's all good. He's just not feeling so well right now. So he won't be joining us. Sorry, I missed that. I was just reading that text really quick.
Travis, what do you think about what I said?
So you're going to buy it is what I'm hearing.
If it gets to an enticing price point, I will buy.
Bro, it was at $100. What are you saying?
I'm still having a hard time wrapping my brain that this is going to become a $500 or $600 billion company.
Sell your shitty Apple and buy Hood already.
But Steve, everything needs to be a 5-6x for you to take a bet on it. You think Meta's going to 5-6x?
No, but I have no interest in getting out of Meta. I'm already in it.
Okay, but
I mean, look, does it make sense for me to get into Hood at these levels? Do I think it's going to double from here in the next couple of years? I don't know. I think SoFi will. Like, I should have been in Hood the whole time, but I wasn't. Because I let personal bias get in the way of it.
I mean, I don't think it's like that crazy, man. We live in a world where more and more of these companies are multi-trillion-dollar market cap. Like $100 billion is not. It's not as big as it once sounded. In terms of this massive threshold for these companies, and especially now with what they announced with prediction markets earlier this week. I think they have a large runway to capture more total addressable market. Right. We were talking about this with Roy earlier this week around prediction markets. And the fact of the matter is like, well, there's seasonality with regards to Hood because of the options markets. If we go into a bear market, let's say, crypto is going to take a hit, options volumes are going to take a hit, and so Hood's going to take a hit. But prediction markets are options for everyday things. Like, they're not buying and selling calls and puts on equities. You can bet on the weather if you want to, and that's not necessarily cyclical. Like, you can bet on anything you want all the time. And so I just think that so many of the initiatives that they're doing is diversifying away from one of the big bear cases, which is their cyclicality as a business, because they're so tied to equities. Every single year that passes, they're tied less and less to that volatility to like earn their money.
I agree with you on that point. Where do you think their revenue is in 2 years from now?
Higher than what it is right now.
Okay, I will agree with you on that, but I'm just saying general, because we look at SoFi, we have a pretty good understanding, at least I have a good understanding of where it's going to be. I'm looking at the forecasts, and these forecasts going forward are just not enticing at the moment compared to other companies.
Yeah, but that's based on analysts who
Yeah.
historically have been so off on any growth company.
They for the last like few years, if you were to go back multiple years and look at what their predictions were for 2024 and 2025, they were expecting like 20 to 25% growth, which is honestly what Hood told them that they were going to do. They said that they wanted to stay above 20% growth. What we ended up just putting up was 100% growth year over year. Like it's, you know, the forward predictions are not that useful.
All right, so let me ask you this. Both of you are shareholders of SoFi and Hood. You're going to allocate more capital. Where's it going for a 1 or 2 year basis?
1 to 2 year basis, SoFi.
Yeah.
How about for a 5 year basis?
5 to 10. Hood. Here's the thing.
You see where I'm getting at? I already missed the huge run up on Hood. So now it's a matter of if you're going to deploy more capital. When I look at the verticals that one has versus the other, I just think from today going forward, there's more ROI on SoFi because I already missed the run on Hood.
Yeah, but if that was like the end of the debate, you would have bought SoFi instead of buying Hood. But the fact of the matter is you buy like a gazillion different stocks and you buy them all for different reasons. But like if you're buying a stock because it has a 7% dividend yield and it's going to freaking be flat for the next 5 years, but you're buying it for the dividend, like it's the same dollars that would have otherwise went to Hood or SoFi. So I don't think you can use the like Hood versus SoFi argument for the next 2 years unless you intend to put that money actually in SoFi.
If it does, I mean, I'm not actively buying SoFi, but it would be going in BMNR at this point.
I've been, you know, reading up about some of these companies that have done well historically. Like I've been reading up a lot about culture and stuff like this. And one of the things that they said, like, just truly has been across a lot of the best businesses that have taken on larger, companies is, well, a few things. But the one that I wanted to highlight was just an idea generator, like a company that is able to think of multiple new markets that they can enter it with speed, and do it in a market that is fast growing, easy to understand, and like that market is also pretty new, fast changing. Prediction markets is that. Options for retail, futures for retail, all of these things are brand new markets that Robinhood is essentially popularizing. And the one thing that I love about Robinhood too, the whole business model is so easy to understand. There's like, even to some degree, it's way easier to understand than SoFi's. Like SoFi's, you have to go through and make sure that their default rates are going okay. You need to understand the actual like capital markets and how those are doing and follow that with rate cuts and see what their competitors are doing. Hood is just, is the market green? Is it red? And are users continuing to pick their products over their competitors? And you can see that through a UX UI, just how do the products actually feel? Are people referring their friends? And I would say Robinhood as a brokerage is probably the number one space where people are just honestly telling their friends. Like,
Do you think their revenue is going to double next year, Steve?
Whose revenue?
Hoods.
Revenue double? No.
Well,
But I
okay.
don't think it's fair for me to say that because I really don't follow the company as closely as I should to be able to answer that.
I don't
Okay.
think it's going to double next year.
But double, I mean, that's a big
What is
stretch.
realistic? What is realistic for the revenue to increase next year?
I think Wall Street would be pretty comfortable probably saying something like 25%. I think if you, I'm probably closer to 40%.
Why,
But
you think it's going to be a 40% increase next year on revenue?
yeah. Like markets, if you are optimistic, it like, here's the thing, don't hold me to it, because if we end up seeing some sort of, rate pause or even rate hike, like any black swan could happen, then the whole, like, we could have a red year. We could have a down year on the S&P 500. That would change the trajectory of Robinhood. Like, they are dependent on what the markets are doing. But from everything I'm seeing, the AI trade's going to continue to stay on, and 2026 is going to be an overall green year for markets. That's my opinion. And in that case, Robinhood does very well. And I think along that, they're going to continue to take market share. Nothing? We sit in beautiful silence here. Look at Tevis. He's got a mustache now. He doesn't need to talk.
I think it pays to have a position, Steve. Like, you don't need to make it a major position or large, just to have exposure, if for nothing else, just to keep better track of it. Force yourself to learn a little bit more about the company, and then if you don't like it, you can cut it all together, but you at least have peace of mind if that's the case.
He did have it. That's the thing. He did have it, and he sold it.
Christmas gift?
As a Christmas gift.
I mean, that's not, dude, Steve's not going to get up in the morning for $100.
No.
He's not that guy.
No, I get it. But it is funny. That was, you're saying how you missed the boat. And many people last year thought that they missed the boat, buying in this company in January, because that was a $36 stock. That, if you guys don't remember, that was very expensive for that stock at the time, because we had just run up from, $16, or even, you can go even further to $8, up to 36. That looked expensive. Now we're sitting here at 128, and people are once again saying that we're topping out. But it is definitely going to be harder to grow at these levels. Whenever you compare assets under management at Schwab versus Robinhood, we have, essentially like a 30x to go. It's
But
incredible.
at the same time, I got to tell you, that 2% is making big money come in.
For Schwab.
No, for Hood. The 2% match is making big money come in.
Oh, sorry. I see what you're saying. Yeah.
So
Sorry. I thought you were talking about an MER or something.
No. They could close the gap much quicker than what people think. I mean, I can't say the number, but what I was told that this one person moved made me just like, you gotta be fucking kidding me. I could have, if I didn't know better, I would have thought it was absolutely not true. So when I heard that,
you moved it for the 2%.
Yeah,
that is not true. He took advantage of the 2%. He's a huge fan of Robinhood and has a financial incentive to help that company win.
regardless of that aspect.
Regardless, yeah.
Regardless of that aspect, the number that was moved was insane.
Yeah.
And it just goes to show me, somebody who has a bias against Hood, that people are willing to look at for the entire ecosystem, and that 2% match is a huge kicker. And the brokerage house that it got moved from would not match it for them to stay, which is crazy.
Curious, though. If the 2% move is, you've been considering it for a while, what is stopping you from moving? There are some things that obviously Hood is missing, definitely certain account types for individuals, but they are closing that gap. Every couple of months or so, you end up seeing a new account type that's available, even in the UK or in other areas where they end up opening up to new account types, what continues to hold back certain investors from switching over to Hood? Is it just the cost of switching and learning a new platform? Like that's maybe my concern, is that the growth rate right now might slow down. Like it's hard to double, right? Whenever you go from 1 to 2, going from 2 to 4 is much harder, and going from 4 to 8 is exceptionally hard. Like, have we gotten through sort of the low hanging fruit from Robinhood, and now the progression towards, bringing their accounts from 28 or 27 million accounts up to 50 million? Like, that's the hard slug. Now you're taking it from existing players that will end up matching to keep, I've heard Steve say, a lot of times they won't match that incentive to switch in order to keep that money there. But if they feel as if their entire business is switching over to Robinhood, they will pay those fees. Like, they're not just going to sit there and die.
The one brokerage is going to have to make a switch, and I think they're all going to have to figure something out, because if they don't, we're going to enter the greatest wealth transfer that we've seen, and people that are inheriting money, depending on their age, will likely take those assets off of the platform they're inheriting and move them to Hood if they're more familiar with it, especially if there's a financial incentive to do so.
Tevis,
Agreed.
Little off the Robinhood train. Actually, let me stick on that real quick.
Tevis, look at your phone real quick.
I can't. I'm recording on. Actually, hold on.
Have you been?
I saw it.
Have you been building up a position in Hood? I think you were buying before, right?
Yeah, I haven't really been buying ever since it crossed 100. I really got close to buying at 100 like 2 weeks ago, but I just bought BM&R and Nebius instead.
There you go.
So, yeah, I don't know, man. Hood is in a weird spot for me, because it's not like big enough to really make a dent in the portfolio, and so I ask myself, why do I have it? But then I can't bring myself around to let it go. So it just kind of just sits there. It's like a 1% position. It's not really moving the needle at all.
Yeah.
And I think the problem right now is, at least I see a lot more. So from this level, BM&R is under my buy price, and I'm actively adding to it because I know that I'm not going to catch it at the bottom or the top. And it's something I have a lot of conviction. I would say I have more conviction in Ethereum over the next year or two than I do Hood, which means I would have more conviction in BM&R.
Well, I mean, Ethereum is going to have a crypto winter. I guess the argument you could make is like, well, once crypto winter comes, then Hood is also going to have a crypto winter. So it's like the exposure to crypto that it has been the benefit.
It's either direct or indirect.
Yeah.
And
the problem, I'm not anti that thesis, but I think crypto is much earlier than the brokerage space, and so it's harder to know who's going to win. Like, obviously, it does look like Ethereum's doing very well, but there are some new L1s, like what Circle's making with ARC and what Stripe is making with Tempo, and now Klarna just signed a new, or they're creating their own stablecoin on Tempo. So that's on a completely new blockchain. That's not on Solana. That's not on Ethereum. That's on what Stripe is doing, which is, one of the biggest payment names in the world. So is there any sort of concern that like we're almost too early in the crypto space, that like the visibility of who's the winner is too early? Whereas like Hood, it's like, what are the mature brokerages going to do that they haven't done for the last 10 years to try to tackle Robinhood? Like almost to some degree, it's sort of proven that Robinhood is going to win because they're up against they're in a mature business and winning. Do you get what I'm saying?
Oh, when it comes to crypto, I think part of the question is, are the companies that have already built their stablecoin going to change the architecture of it? Because you have 3 pretty big companies that built it on Ethereum layer 2. And we know there's going to be more than one layer that this stuff gets built on. The question is Ethereum going to remain the dominant factor in that space, which I can't answer that. But at least knowing that MasterCard built their layer 2 on Ethereum and PayPal and Shopify makes me feel a little bit better about it.
Yeah. Yeah. Do you think, well, PayPal, though, is multi-chain. So they're across a bunch of different, they're on Ethereum, they're on Solana, they're kind of being agnostic to who. They're letting you pick. So doesn't that give, like, you said you don't know if Ethereum is going to win. Do you think that Robinhood is going to win? Do you think they're cemented as a future winner for millennials and Gen Z?
Oh, I think Robinhood is a winner overall because as long as crypto succeeds, they're going to win. And
But doesn't that give you some better risk reward on the, and I'm just playing devil's advocate here, on the BMNR versus Robinhood on where you're going to deploy new capital?
No, because while they will win compared to the other brokerages, is it going to turn out to be a huge revenue generator? I have no idea on that. But my thesis is still that the majority of stablecoin and tokenization will happen on Ethereum.
Yeah. And I think that's probably, if that's the core thesis, then that's probably the pure play, because if Robinhood pursues tokenization and then all these other traditional financial institutions pursue tokenization, betting markets, prediction markets, whatnot, then the place they're all going to do it on is Ethereum, right? So while Robinhood might compete in the tokenized market, whether it's real estate or predictions markets or whatever the case may be, shares of private companies, European companies, US companies in Europe, they're going to compete with other brokerages, but all roads lead to Ethereum, right?
Yeah, look, Hooded will absolutely, in my mind, be a winner and a beneficiary. To me, there's no question about that, because I just don't see these other companies like Fidelity or Schwab really getting involved. And even if they do, I don't think people are going to care. I mean, it's going to be Hood. SoFi will probably benefit a little bit, but I think Hood is going to be the de facto winner from a brokerage standpoint with crypto. And I do think that there is going to be, for at least in my thesis right now, more upside directly on Ethereum and BMNR than Hood for the short term. Now, for the long term, I have no idea.
What do you guys think about this idea too? Have you given any thought to where SoFi's stablecoin is going to be?
There he said it's Bitcoin Lightning, correct?
No, that's where their international remittances is currently placed, but that's not a stablecoin. So the way that they send money is USD to Bitcoin, Bitcoin to Mexican pesos, euro, whatever.
What do you think? They're going to build on Solana?
I think they are, because Solana was retweeting all of the news about the SoFi USD.
Okay.
And Ethereum did not follow the news at all, like the Ethereum
I
Foundation.
can see that.
So that's the only reason. I don't have any concrete proof, but they were very excited that SoFi was the first bank to offer buy, sell, and hold crypto.
Well, I guess we're going to find out on the next earnings call.
Yeah, no, honestly, we'll probably find out in 30 or so days. Like, I think in January we're going to know.
Well, they report in January, so.
Sorry, yes. Yeah. Okay. Could SoFi make their own network? They could. I don't think they will.
Why make their own network? I mean, Galileo helps, but I mean, Solana already has the architecture out there.
But a lot of companies are making their own L1s, though. Like Circle is making one, Stripe is making one. I think Tether is considering making one. I don't know 100%. There are a couple L1s, new L1s, which negates the need for Ethereum. Is that of any concern?
At this point, no.
By the way, that's my answer as well. I'm not trying to create FUD. I just want people to know the real risks. I do think right now there's zero signs that those are picking up. Aside from Klarna USD, which is going on tempo, but we'll
I mean,
see.
look, there's huge risk because we don't know what any of this is going to truly be built on or how it's going to impact anything. Ethereum may not do well. That's also a investment thesis that you have to at least consider, that none of this moves the needle for Ethereum either, and that more companies build it on Solana or an XRP. So we'll see. It's going to be about a year and we'll know. But as of now,
you're the XRP guy. What is happening at XRP that even remotely excites you?
One, I have such a low average that
No. Nope. What are they
you don't
doing?
even let me finish. Jeez.
Why do I get in at these prices?
I didn't say you should.
You can't say, oh, well, I've got a big margin of safety. What are they even doing?
I wouldn't even say a big margin of safety. I would say a ridiculous margin of safety.
Okay. Okay.
But at the same time, look,
Are you 10x on the position or something?
I'm in an average of 19 cents.
Okay. All right.
So it's a really big margin of safety. Now,
I had to look up where they were at because I didn't even know.
yeah, I mean, look, I don't have a ridiculous amount of money in there by any means. It's not even, if I told you, I'll tell you off stream, like you're probably thinking I have a lot more than I actually do in it. So don't think that. But I am not as bullish as I once was because I think stable coins are going to be a little bit of a problem. But on the other hand, I'm not sure if they will be because XRP is more of an institutional platform now through Ripple. And I think that we're going to see over the next year all of the deals that Ripple did with these big banks. I think that they're going to capture a good amount of transaction volume that happens on the Swift banking network. So that's why I'm not converting it or getting out of it. Because at this point, I put an amount of money in where if this works, I'm good. And if it doesn't work, I don't care.
But for
It's
real,
a true moonshot.
Didn't Swift start building a L2 on Ethereum?
Swift started building something, but Ripple has over 300 partnerships with banks. And let's see what happens. I need to really go down the rabbit hole more than I have in the past couple of months on it. I got less interested due to all the stablecoin stuff.
I don't like the Bud comment. I wasn't trying to highlight the
I don't
attitude.
care about that. And it doesn't matter who is picked by Swift. The whole idea with XRP is that transactional value will move off of the Swift network into their network.
Yeah. Okay. That's the XRP thesis. If anyone likes it, that might be interesting to you.
No, I'll do more research and actually come up with an updated thesis.
There's nothing.
I haven't really followed it closely in the past couple of months.
That's fair. I'm completely ignorant to the subject, and I'm making assumptions.
I used to
on
know
no
a lot more about it, but with all the stable coins coming out, it's just less and less of their whole cross-border payment ability is not a one company can do it. A lot of companies can do it now. So
yeah. Tevis,
Yeah.
I would love if you went
Into XRP. I'm not doing it.
no. Yeah. If you could do a deep dive on XRP. If you could do a quick thesis on Nebius. This is a name that I've started to buy, but I don't know it nearly as well as you, but I would like to. So can you?
That'd be great because I'm interested in Nebius also.
Yeah. So please take the next 30 minutes.
I'm making full on deep dive videos on Nebius that you guys could definitely watch.
Nope.
Have you guys seen all of these rumors about their new locations? Because that's really interesting to me. And that's actually in the news right now, but there's no press releases for that just yet. Let me throw up a post.
Yeah. Is this from RJC?
No. So RJC was talking about the Indiana and the Alabama sites. This sort of just highlights a little bit. So more clues are being dropped for different sites. So you have the Alabama site, the Indiana site, and a lot of these clues.
For someone that's new to Nebius, because this is a fintech show, what are these sites? What does Nebius do?
They're data centers. And Nebius basically won't build unless they have the contract ready, unless they have a client on the other side. So basically, think of it like just in time almost. That's a bad example, but the point is like almost like drop shipping. Like only when there's an order do they start on the actual fulfillment of the order. And so when these new data centers start getting built, then obviously there's a client on the other side. So for example, the New Jersey data center, that one has already started fulfilling the Microsoft contract demand. The Meta contract is in their Finland data center, and now there's these other ones.
Is the Meta contract still at $3 billion? I heard that they had room to expand it or something.
Well, yeah, so there's evidence that the Finland data center is expanding. The $3 billion was strictly because that's what they could fulfill in terms of the supply, right? They're booked out for the majority of 2026 in terms of their demand, right? So that's why they increased the ARR as well. But how do we know about these new data centers if it's not in a press release? Well, basically the company that they're working with to build these out is this company Data One, and Data One is the partner to establish the data centers that built their Vineland, New Jersey site. And Data One is now taking out filings and applications for their new sites. So this is just some evidence here. It's not definitive, of course, that this is Nebius and that this is, for a particular hyperscaler. Nothing's been announced from a press release perspective, but the same guys that they have been working with for New Jersey are now exploring space for these other locations.
And the New Jersey site was for a hyperscaler?
Microsoft.
Okay.
Yeah.
That was a $17 billion contract?
Going up to $19.4 billion, I think, over 5 years.
Cool.
So I think their CRO confirmed that it's going to be closer to 19 billion. I think he did an interview recently, and he was basically confirming that. But one of the big things for Nebius is we want to see more developments on these sites.
You got to zoom in. I can't even read this.
We got to see more developments. This is for Dallas. It's explaining around a potential Dallas site. If we see more developments for these sites as we get closer, it's expected that we see press releases dropping for Nebius that they're going to announce another key partner or a hyperscaler or somebody else that is basically who this site is for, to fulfill the demand for a certain hyperscaler.
Gotcha.
So that was, I think, the most interesting. What's Her Face has been doing a lot of good research. RCJ, that account's been really good and diving deep into the actual filings with local authorities around the permitting for these sites, and basically, like, this is all public knowledge. You can see Data One expanded their initial filing, like 10x it basically for their initial filing. I can see if I can find that actually.
Real quick, while you are looking at that, is there a reason why, Nebius is chosen as the sort of neo cloud of your choice over an iRen or a TeraWolf or any of these other smaller names that actually, a lot of them actually saw quite the run up today. There was kind of a divergence between the CoreWeaves and the Nebiuses and the iRens versus the TeraWolves and Cipher Mining and all of these other names. What, like, how do you look at the space?
Yeah, I mean, I don't really, I haven't really looked at TeraWolf. And then Iron, I never really looked. I found out about Iron after I started buying into Nebius, just like a invest and investigate type of position. I initially started buying into Nebius at like the low $50 range, and have since been increasing that position. I think really the AI wave is going to be like the rising tide that raises all boats. But beside that, I haven't really looked into diversifying it across many companies before just diving into Nebius, because I dove into Nebius. I read a lot about Nebius specifically, and then I started learning about Iron and CoreWeave and these ones after, and I still haven't gotten around to TeraWolf, quite frankly.
Yeah, my position is I look to Dylan Patel as quite a trusted source. He runs the semi-analysis team, and their ranking on the best clouds, in my opinion, in a space that I find very hard to understand. You kind of have to look to those trusted sources as to tell you, what are the products that actually matter, and are the contracts that they're actually signing getting great value, and are they of large orders, or are they not returning? So to me, CoreWeave being at a platinum tier amongst its own is quite interesting. Nebius being up there with the AWSs and the Microsoft Azures is also quite exciting. Iren and all the other names are, I think, on the underperform category and below what they even consider ranking.
Yeah.
So that always scared the crap out of me.
Yeah, with Iron, if I'm not mistaken, they're like a miner that turned their services towards AI.
A lot of them are.
Yeah. And so I don't know. I just maybe have a bias against that. I mean, with regards to CoreWeave, I found Nebius to be more vertically integrated as a full stack AI platform, and the debt profile is quite different as well. CoreWeave, my understanding is that they have pretty high levels of debt relative to Nebius. And then the other thing that I really liked about Nebius specifically was their portfolio of other assets. So the stakes that they have in Toloka and Avride and the other ones, it makes them more diversified from a moonshots perspective as well.
Steve, how do you look at this industry?
It got a lot more interesting after the recent downturn because they weren't trading in nosebleed valuations, and CoreWeave started getting very interesting to me along with Nebius, and I can't figure out which one to allocate capital to. I mean, there's definitely a need at this point. I mean, we're seeing it with the contracts they're getting from Microsoft and the other hyperscalers that just can't build quick enough.
Yeah. It's a good problem to have, quite frankly.
It's a great problem to have, as long as they can get everything up and running.
Dude, I just think that the fact that this thing sold off on the dilution point is incredibly short-sighted by the market, because now we're seeing all of these things happening behind the scenes with regards to their data center expansion in the US. And I'm just waiting for the PRs to drop, because I know that those PRs are going to pump the stock right back up. Like they said in their earnings call, they've said in every interview since the earnings call that, we're investing as much as we possibly can to try to capture more of this demand that's out there. And the fact that they're booked for more than half of 2026 is incredibly bullish. And, some of I think it was they mentioned the
You're
earnings
specifically
call.
talking about Nebius, right?
Correct.
Yeah.
I think in the earnings call, they mentioned like their, I think it was their data center in Israel. it basically had reached like they were fully sold out before the data center had even like opened, and so I think this is an important point, that they won't build unless they have a customer at the end of it. So it's a very measured approach. They're not like over investing, hoping for the demand to be there. They're securing the demand first, and then they're building to fulfill that demand.
This is something that I haven't taken a play on quite yet. The way that I see the energy bottleneck is that there's going to be a focus on performance per watt on the trade. So my play for the energy is honestly NVIDIA, as I think a big solve on that will be the massive advancements in new chips that will solve a little bit of that bottleneck. That said, there's definitely energy plays that will probably work. I know, Tevis, you've taken part in some of these trades. Steve, I think obviously you have a lot of energy stocks in your portfolio as it is. But how do you guys think about energy stocks as being an AI play? Is that a strategy?
Not for you.
Not for me.
Not for Tevis either.
What do you mean? Like it's going to take a long time to play out for the thesis, you mean?
I don't think that you're going to see the upside in energy the way that some people think it's going to happen. Look, a lot of upstream is tied to the price of oil. It's under 60. The administration wants it under 60. I don't think we get oil at 70 or 80 for a while. Pipelines are great for a dividend, and I think the sector needs a re-rating. I think has great value. But when you look at the potential for ROI in something like a CoreWeave or a Nebius or even an Amazon or a Microsoft, I just don't think either of you would even consider investing in energy. And since you guys don't necessarily really care about reoccurring income, then there's really no point at this stage. Now, do we need more energy? Yes. Do we need more upstream production? Yes. Do we need more volume flowing through energy infrastructure companies like an Energy Transfer or an Enbridge? Yes. But that doesn't mean that the market is suddenly going to re-rate them, or you're going to have enough volume coming in for them to be able to stay on pace with just investing in the S&P 500 or even taking a shot on Microsoft or Amazon.
I do like the idea of Bloom Energy. Now, I need someone who's actually into this space because I do not know it well. And this is why I do not divvy away from my circle of competence, because I don't know what I'm talking about. But just the idea of on-site power makes a lot of sense to me. You're not necessarily just taking a vote on, okay, well, if data centers are 10% energy, then that increases total energy demand. Energy is going to do well. Sure. But Bloom Energy honestly seems like a direct bet on data center expansion. And so they're putting up, I think, like 60% growth right now. It's not consistent, but that could even expand going forward. That does seem interesting to me. Have you guys taken a look at Bloom? And if you have, maybe we should look to get someone on the show to actually help break down a name like that. Because I have been, slightly looking at it from time to time, and I'm like, man, there is something here.
Oh, there's something there. I mean, the analyst community has such huge growth rates on it that even at this level, it could make sense if you're willing to hold it for 4 to 5 years.
Yeah, I've not looked at it. I would love if people who are watching know content creators on X that talk about Bloom that we can reach out to invite on the show for potentially doing a stock tank. That would be nice.
Yeah.
I'd love to learn more.
Yeah, I'd love to learn more about it too. I looked at it 4 or 5 years ago, and we just decided it wasn't worth it. I had somebody who was a electrical engineer look at it, and it was a much different company then.
Fire him.
Oh, we can reach out to Chris. Chris Camillo.
He's all in the freaking Bloom.
You can, maybe. I don't know. You got his number? I don't have Chris Camillo's number.
I can reach out to him. No worries.
All right. If you can get Chris Camillo on, I mean, yeah.
I'd much rather talk to Camilla about something else than energy.
I don't got connections like that. Doesn't Amit? Yeah, but Amit's not here, you know, and it's not a very good text to send your friend saying, hey, man, do you have your friend's number? That's not something that I like doing, you know. But what's it called? Aside from the energy plays, the chip plays, me and Tevis have talked on a bunch different data center names. And obviously we spoke about BM&R. What else are you guys looking at? Anything?
I bought some more Ethereum last weekend. Like straight up Ethereum. And that was the first time I bought Ethereum since August. I don't know why I'm so low energy tonight. I apologize. But yeah, first Ethereum buy in like 3 months.
My girlfriend ended up bringing home strawberry passion fruit Celsiuses. I've never tried that flavor.
I didn't even know that existed in Canada.
It's here. It's here. We have it.
You guys got to get off the Celsius.
We need more Celsius.
No, drink coffee. Get off the Celsius.
We don't have, I don't know what you said, but we don't have that here in Canada.
You have Tim Hortons. I know that.
Oh, you mean coffee? Not
Yes,
coffee.
Tanner.
Coffee.
Coffee with a Q. Coffee. Yeah, no, we do have some coffees here. Yeah, I mean, come on, bro. You eat cookies and milk for like a brand, and you're worried about the Celsiuses.
Listen, that stuff's not good for you.
That's you think it's worse than the chocolate chip?
Absolutely.
You know, I'd love a cookie.
Is S&P rebalancing next Friday, like this upcoming Friday?
I don't know. I saw some report that what's the company that got it? SanDisk ended up getting into the S&P 500, but I didn't see what company ended up leaving. That looked like a full rebalance to me. They moved like 9 different names across all the Standard & Poor's funds. That seemed random to me. I thought that was supposed to happen first week of December, but it happened like last week.
When do we think SoFi is getting in the S&P?
I was thinking it was going to be December, but
You were?
yeah, why not? What's a bigger financial name that needs to be in?
I mean, no, it's not that they don't deserve to be in. It's just that a lot of companies haven't gotten in on their first, time around.
Yeah, but it's not first time around.
Or
I think this is the third.
Is it?
Let's not forget,
Yeah, it's the third quarter, I think.
the S&P loves financials.
S&P loves financials right now.
Yep.
A lot of the names above us have gotten rolled at AppLovin, Robinhood, TTD. There's been a lot of names that were bigger than SoFi that have been taken off. I think that that could be quite interesting for SoFi. I can't think of a financial name that I'd rather get in than SoFi at a bigger size. If Williams-Sonoma is getting into the S&P 500, SoFi deserves a spot. No?
Interesting argument.
Stephen Fiorillo likes his Euro.
Interesting argument. Look, I think SoFi is going to get in there. I just don't know when. Hopefully it's this time around.
Am I going to get back into app? I mean, there might be a day, but it's just not right now. Yeah. No, I've been really looking at my entire account and wanting to do some rebalancing. I have 3 names. I showed Steven my full breakdown of my portfolio and everything.
You've never shown me. You're
Well-
scared I'm going to leak it.
No, we didn't talk dollar amounts, percentages.
No, even that. Trust you more, Steve. That's the thing. He's
Right.
like, no, you're gonna leak it, and I'm like,
recently.
it's Steve. He's like, you're gonna leak it to people. I'm like, dude, I'm not gonna leak it. He's like, not intentionally. You might just say what my portfolio, and I'm like, I'm not like accidentally gonna say what your portfolio is. Silly guy.
Um,
And then he says it to all his freaking paid subs. I need to fucking pay a subscription to be his friend. This is the
No
problem.
bueno. No bueno.
These creators, man, I swear.
First of all, we were talking about the dollar amount, and it literally happened to Amit recently where people were not talking dollar amounts. Then Chris Patel said something that Amit didn't want him to say. Like, it does happen. Things slip out.
I have no idea what you're talking about.
And that's okay. We'll keep it that way. But yeah, that things do slip out. So yeah, I didn't want to say. But yeah, there you go. I was looking at my portfolio, and I'm extremely heavyweight in AI, fintech, e-commerce, blockchain. But advertising is actually a smaller sliver than I would have thought. I'm in Reddit. I'm in, Meta. I'm in Shopify to some degree. Very, very small percent is advertising. And then Google, a good percentage of that is advertising. But still, it made up for a pretty small sliver of my overall investing strategy. I need that to grow. And there's some things like Shark Ninja, which I do like, but honestly, I think it just might be diversification almost. And certain names in my portfolio, I'm in Airbnb, I'm trimming it. But I have to start looking at my total portfolio allocation and realize what I want to be in and what I don't want to be in, even if there is value in those names. Like, I'm a total addressable market investor, but I need to be even more disciplined there. That's something that I've been trying to focus on.
Own everything.
I don't even know why you want to be in advertising.
Well, because how does it get disrupted by artificial intelligence?
Just like, it's such a, I don't know, like, of all the things you could be in, it just doesn't seem exciting.
So
I think it is probably the greatest. I think search is the greatest business model ever created. You offer something that they charge sometimes hundreds of dollars for a conversion, and what it costed Google in order to get that lead was nothing. Like, it's the highest margin, easiest to pay off, and it only gets better as technology gets better. As AI gets better, conversions get better, targeting gets better. I just love advertising. And
look at the stats from Meta.
Sorry?
I don't know. It's just, it never struck me as like a super exciting, but I guess it definitely makes money at a high margin with low like overhead.
Every single big business has gotten into advertising in a huge way, not in a small way, in a huge way.
Can I give you some stats on Meta that may change your mind, Tavis?
Sure.
Or do you not consider Meta to be what you're thinking about as advertising?
That is 1,000%.
No, you could consider it a communication company also.
No, you can consider it an advertising company
off of the ads.
But I got some stats for you. So, family of apps revenue, $50.8 billion, up 26% year over year. That's a big growth rate.
They should change it to family of ads, because that's what it is. It's an ads business.
Yes.
They have that's their only revenue line in family of apps. There's no subscription ones.
No.
Yeah.
So end-to-end AI ad tools is at a 60 billion run rate.
Meta breaks it down between family of apps and then Reality Labs,
which just loses money.
Yeah.
What's the Reality Labs?
Like
Meta.
VR, Meta, like all their research.
AI piece in there or no?
Yeah, probably.
You can consider some of it, but the other part of the AI is in advertising. So what they say is the annual run rate of revenue, flowing through Meta's end-to-end AI-powered and automated ad solutions, which is their Advantage Plus model, is over 60 billion run rate. I mean, that's freaking huge. And then when you start looking at the actual stats, AI recommendation systems across Facebook, Instagram, and Threads, which I don't even consider Threads a platform, but I guess it's pretty big at this point, led to 5% more time spent on Facebook and 10% more time spent on Threads. And Instagram video in Q3, time on it was up more than 30% year over year. And check this out. Reels now has a 50 billion plus annual revenue run rate. Like, that's freaking
Threads,
wild.
you mean? What do you mean?
Real.
Reels? Oh, Instagram Reels.
Instagram Reels.
It's crazy. It's crazy.
Literally,
Yeah.
just look at this. This is one business. Google did $265 billion in ad revenue last year and did that at around a 38.5% operating margin. I mean, I honestly think advertising is like one of the, like, if I could split my
Crazy.
dollars into sort of three categories that I want to be involved in, and these are not subcategories, I'm talking like overarching like themes, would be artificial intelligence, advertising, and essentially fintech or blockchain as sort of one collected piece. And that would include e-commerce, fintech, crypto, all of the sort of things. I think payments and those things are just such easy to understand, like highly reputable or like repeatable, high margin businesses.
Let me give you two more
These
stats.
businesses are sometimes looked at as like literally the greatest businesses ever ran and developed of all time.
Let me give you two more stats on the AI part. More than 1 billion monthly actives already use Meta AI. So everybody's talking about how Meta AI is a bust, blah, blah,
That,
blah.
by the way, that is a buzz statistic. That's absolute crud numbers, and I don't believe it at all.
Oh, that's what they said on the conference call.
Yeah, I know. You accidentally opened Meta AI whenever you went to Messenger or WhatsApp. That's no one uses
about
Meta
how
AI.
about this?
Zero people. They
they
should have put a
also
big fat
said-
zero on that.
They also said that people have over 1 billion active threads with business accounts every day across Meta's messaging platforms.
I think that's real.
So people are really using this, and it is really jumpstarting their revenue. So this train is very enticing from a advertising revenue standpoint. And Meta is going to be a winner on AI because at the end of the day, there's really two places you're going to spend your money if you're advertising, and it's through Google or through Meta. Now, Amazon is starting to be a formidable competitor, but it's not nearly in the same ecosystem.
You know what? This is another thing too, really quick on the Visa and MasterCard. I think it shocked everyone. It definitely shocked me how much, especially Visa, has just doubled and tripled down on stablecoins. Like,
Yeah.
if you watch their earnings call, they probably say stablecoins more than they say payments on that call. Like, it must come up 150 times on the call. It's the old, like, I listened to their most recent earnings call. It was like a webinar on stablecoins. I'm like, they are going all in, baby. It really is true. So I think that surprised everyone how fast they adopted or adapted. Sorry.
Is Visa one of the greatest businesses ever?
Visa, Google. I don't
I
know.
was looking at their numbers today. Man, they got so much forward growth expected. It's pretty wild.
Yeah, it is. And I keep thinking that there's better names out there, and I just keep not holding them, and it's just hurting my portfolio. Every year that all of us don't hold Visa, we are making a bad play on our
And you
portfolio.
think that people are not getting rid of Visa credit cards. They're just not.
It is interesting.
It's legalized loan sharking.
And American Express as well, maybe.
American Express is a great company. The problem is that a lot of small businesses don't take Amex, which ultimately, when you look at their numbers, isn't really impacting them because they're playing in a different field. But if I had to pick Amex over Visa, I feel like I would pick Visa, but I'd have to actually look at the numbers first. But Visa is just everywhere except MasterCard and Visa.
What I find so crazy is that like a bunch of small businesses will go, oh, no. We're not going to accept the extra 0.5 or 1% on the exchange rate or on the interchange fee because that eats into our business. So we neglect to offer that solution. And then the big businesses that somehow are more profitable than those small businesses are saying, hey, we will let you use buy now, pay later, which is essentially a 6% take rate. And by the way, we'll also pay your interest. Like, talk about, I think it pays to do business. And the customers and the companies that allow you to pay whenever you want to, McDonald's, Walmart, all these companies accept MasterCard. All these companies are paying to allow buy now, pay later. Like, it's so funny that the big businesses, even though they might be for the average consumer, do not care if you're paying with Amex or do not care if you're paying with buy now, pay later. They want to make sure that your conversion rate is high. That's more important. If you're turning away 1% of people that want to use Amex, you are losing money on not accepting that 1% interchange. I'm no business professional, but that just seems like normal math.
Can I share something?
Yeah.
It's not about Visa or MasterCard. I'm going to pivot. And I don't know if we want to do it here or if we want to do it in the after hours. This I found was interesting. I just saw this.
Zoom.
Bar chart posted saying going back to 1926, the S&P 500 has seen an average drawdown of 18.2% in the 12 months before midterm elections. Going back 60 years, the smallest drawdown has been 7.4%. The largest is 41.8%. After the midterms, all is well. But before the midterms, it's kind of crazy. And if you look at like the percentages here, they're all like negative. I don't think I'd see a single positive percentages in the 12 months before the midterm.
What would be interesting is if they added a section on there indicating what happened when it was a split government versus a controlled government, because the market likes when nothing gets through.
Yeah, I'll tell you what, Steve, it doesn't matter because every single one of these entries is negative. Like every single time in the 12 months since 1926, in the 12 months leading up to the midterm in the last 100 years, it's every single time been negative.
I take back everything I said about next year being good, and I'm selling hood on Monday. No, listen, I'm kidding.
A lot of places are coming out with 8,000 S&P for next year.
This is crazy.
I think that means it's not happening, right? The more that we try to talk it into existence.
I mean, I kind of want to like gaslight myself into saying, well, the drawdown already happened, but in reality, the S&P only fell like 2% and is back to, is going to be close to back to all-time highs soon. So, yikes.
I mean, which drawdown are you talking about? We had a bear market in April.
But that's not 12 months before the midterm.
No, but you said we had a drawdown. Just asking which one you're talking about.
The one we just had, dude, like last week.
Okay.
So, yeah, sorry to burst that bubble, guys.
Well, how about this? If the Fed doesn't cut rates, most likely we're going to go to 6,200 on that sometime.
I just realized the time, and I've got a hard cutoff tonight, so we have to transition this over to the after hours.
Okay.
Ladies and gentlemen, thank you all so much for watching. If you want to join us in the after hours, you can hit the join button down below on any of our channels. Doesn't matter who. It should be. I got a lot of complaints. People, like, I uploaded at like 1 o'clock. People said, you said it was going to be around noon. Guys, it might be a day late, okay? It might be a couple days late. I'm doing my best out here, but honestly.
But why?
Huh?
Yeah,
but why? You can't just download from StreamYard and send it to us?
Huh?
You can.
You can.
Everything
You can
takes
just
time.
click download. You could even do it tonight when we're done after it's done processing. You hit download in your email.
Everything takes time.
No, it doesn't.
Bro, love the BMNR vids. When is the next one? Dude, you should have taken that $5. You could have joined us in the after hours.
Yeah, that's true. That's true. But also, it's going to be either tomorrow, but most likely Sunday at 9 a.m. because that's when they've been coming out in the last couple of weeks.
Guys, you can stream live for subs. Why not? It's because we can't multi-stream for subs. So an individual can stream to subs, but we cannot cross-stream to subs. So that's the problem. All right.
I agree with George. Do your job, Tanner.
I agree also.
I'm not very good at that. There's a reason why I'm self-employed. I'm barely even hireable at this point. Okay.
Maybe I should just make the link for the after hours and then I'll download and send it out to everybody.
Yeah. If you want to take on that responsibility every week, Steve, then you go right ahead, sir.
I'm just saying you guys will have it tomorrow, if not tonight. Just saying.
Ladies and gentlemen, thank you all so much for watching. Really do appreciate your time. But bye for now.